Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin crashed below $90,000 for the first time in 7 months, erasing all gains from 2025 as fear grips the market. As of this morning, Bitcoin is trading around $89,981, with sentiment at extreme lows not seen since the March crash. Short-term holders are capitulating at historic rates, dumping 65,200 coins worth over $6 billion to exchanges at a loss in just 24 hours. BlackRock's Bitcoin ETF led an exodus with a record $523 million single-day outflow on November 19th, part of a brutal $2.5 billion November hemorrhage. But here's the twist. The same panic that's crushing retail might be setting up institutional accumulation. Strategy bought 8,178 Bitcoin for $835 million at an average price of $102,171 per coin, now underwater but still confident. Harvard Management tripled its Bitcoin ETF holdings to 6.8 million shares worth $443 million by September 30th. When fear hits 10 out of 100 on the index, history shows these are the zones that reward long-term holders. On the policy front, major shifts are underway. The White House is reviewing new IRS rules that would require Americans to report and pay taxes on foreign crypto accounts, using frameworks similar to offshore bank reporting requirements. The proposal broadly defines foreign accounts to include offshore exchanges, custodians, and potentially certain wallet providers. Treasury says the goal is to keep crypto activity onshore where it can be tracked and regulated, discouraging US taxpayers from moving digital assets offshore. Kraken just filed to go public following an $800 million fundraising round that valued the exchange at $20 billion. The Wyoming-based platform confidentially submitted its draft registration form with the SEC on November 19th. Ken Griffin's Citadel led the round with a $200 million investment. The IPO is expected to proceed once the SEC completes its review, making Kraken the latest major exchange to hit Wall Street after Coinbase, Gemini, and Bullish. New Solana ETFs are gaining traction. Fidelity launched its FSOL fund with a 0.25% fee, while Canary Capital rolled out SOLC with on-chain staking through Marinade Finance. VanEck's VSOL debuted with 0 fees, waiving its standard rate on the first billion in assets. Collectively, Solana ETFs saw their largest inflow day at $26 million since early November, even as the broader market sold off. Short-term Bitcoin holders are realizing $427 million in losses per day, levels not seen since the November 2022 bear market bottom. But long-term holders are distributing over 800,000 coins in the past 30 days, rotating from early adopters to institutions with lower churn rates. CryptoQuant CEO Ki-Young Ju says if cycle theory holds, $56,000 marks the realized price bottom, though he cautions the cycle may be broken and price could move in any direction based on macro conditions. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.